We've seen a lot of movement this week on the trade truce headlines, on the Huawei headlines coming out of the G20 in China. Are investors counting their chickens before they're hatched?
Well, it's funny because I don't think you've seen a big surge. You've seen some optimism that reflects, I think, general optimism about the Fed and kind of being in easing mode. And nothing bad happened out of the G20. That's a good thing. But I think people have learned that it takes a little bit of time. You have these announcements about trade ceasefire, maybe trade deal. A week later, it looks a little bit different. Even with Huawei, we're seeing now a little bit of confusion about what exactly was promised and what exactly will be delivered in terms of easing up on Huawei. So I think markets are actually taking their time to assess what this ceasefire, this trade ceasefire really means.
Peter Navarro was on CNBC yesterday. His expectations are that the agricultural product purchases from China are going to be immediate and significant. Those are his words. Is that something that U.S. farmers can count on?
So, the Chinese have been silent on that. It's not exactly clear whether what the U.S. heard is exactly what the Chinese meant. So, look, it's a good thing that the G20 put the trade talks back on a track to at least potentially be productive. But the two sides are quite far apart in terms of resolving their substantive differences. And I don't think that we're going to see a removal of either U.S.-China tensions more broadly, which I think are going to continue to rumble along. Because I'll add with that point, it's not just Trump that is pushing, U.S.-China tensions. There's been a broad shift in D.C., bipartisan shift towards being harder on China. And so, even going into 2020, if there's a different president elected, I don't think that you're going to see those kind of clouds just go away.
And there's still real questions here about the structural reform, how that would happen, and how China would codify it into law where there's an enforcement mechanism to go along with it.
And as we know, trade tensions aren't just focused on China. So you've got the prospect of auto tariffs against the EU, against Japan. You've got the continuation of the steel and aluminum tariffs. We're a tweet away from something else coming up like Mexico, which was completely unexpected. We don't see kind of trade Armageddon happening, big tariffs against China, Mexico, or the EU. But I think you will see the president continue to stir the pot. There's the continued uncertainty, which then weighs on businesses in terms of what their outlook is.
And we're starting to see more assessments that it is a real risk to the underlying foundations of the global economy and the U.S. economy, that if it lingers, if the uncertainty lingers, that it's bad for business and bad for growth.
So U.S. economic data recently has been kind of wobbly, and in particular, in terms of business investment, there was a big surge of business investment over the past year and a half that really leveled out beginning last summer and has come down. Consumer confidence is held up. Job growth is held up. Those things we're going to get some news on this week. Actually, today we'll get the ISM non-manufacturing numbers to see whether the broad service economy is holding up. We'll see on Friday the jobs report. But there have been other areas of the economy that have been weakening, and I think if you go, for instance, to the ISM manufacturing survey that came out on Monday, it was a chorus of complaints about tariffs and the uncertainty that those tariffs create. So it's not the only thing that's been going on, but it definitely causes businesses to hesitate at a moment where otherwise they might be more confident.